a.m. in New York City, 10 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. A tech rout extends into the Asian session. The dollar weakens ahead of the June payrolls report. OpenAI and Apple make their cases to deepen ties with the US government. And the yen strengthens pretty abruptly against the US dollar as growing intervention risks keep traders on high alert. So let's take a look at that. We'll begin with the yen. As you can see, just a couple of hours ago, we had an almost 1% strengthening move in the yen. A couple of things to note. South Korean authorities were talking about vague hints, at least, at coordinated FX intervention. We also had a report from Reuters to the effect that the Japanese authorities are changing their position, that they're no longer going to telegraph any potential moves to the market, that they're just going to act abruptly, and there won't be any line in the sand at which point they telegraph moves. That said, Credit Agricole's Valentin Marinov says there hasn't been intervention. It would be very unusual if there were to be intervention on a day with so much liquidity. They'll wait for thinner liquidity conditions and also post non-farm payrolls. They'll want to see where US dollar yen is trading. But as you can see, that strengthening is holding for now. Into the Asian session then, we had Kospi added steam to the tech sell-off yesterday. The Philly Sox obviously was down 6.25% by the end of the session after Meta said it's going to compute basically, and that is extending obviously into Asia across the board, but pretty much concentrated in South Korea. That brings now its gain for the year to just 82%, but remember it was close to 100%. If we move on and take a look at what's happening in Europe, we'll start with Brent crude because that's a story that's affecting the entire global markets at the moment, down to almost $70 a barrel. So this is its pre-war price and even a little below that. And as you can see, it's extending into Europe with the Stoxx Europe 600 grinding higher all day long, even though there isn't that much to be excited about in Europe, but definitely oil prices coming down, helping some situations over there. And then you have a stronger euro today at 114.20, and that's primarily a dollar strength issue in this particular case, although in general the dollar has been weakening. It's euro strength, dollar weakening. Let's take a look at futures and how they're trading now after all of that. So you do see just a little bit of weakness in the S&P futures. We'll see if that continues. Obviously, it's a little bit more pronounced for NASDAQ 100 futures, but we're very much off our lows. So we'll see if that sell-off continues into a second session. And if we take a look at yields, obviously all eyes on the jobs report and whether it comes in around the whisper number of 130,000 or lower. The two-year yield has been grinding higher. It's at 417, and that 30-year yield making its way up to 5% after Kevin Warsh's comments at Sintra and really all week long. All right, let's get to some individual pre-market movers now. Over to London and Chloe Melly.
Good morning, Bonnie. This huge sell-off that we saw in the Kospi in South Korea has spilled over into European tech stocks and now is spilling over into those US tech stocks as well. As we've seen time and time again over the last few months, these expectations are so high in that sector that any hint of bad news really tends to trigger huge sell-offs and huge profit taking. And that is very much what we are seeing today. And Micron in particular down more than 1% in pre-market this morning. Moving on to American Eagle, which is also in focus today after confirming its guidance and also announcing a new CFO, a CFO that has a lot of experience with driving growth and scaling global consumer brands. But we are actually seeing a bit of weakness there for American Eagle. Maybe this reaffirmed guidance was just not quite enough to reassure investors. And finally, Bayer over in Germany is up this morning after getting upgraded to a buy rating by Deutsche Bank analysts, with the analysts saying that the recent Supreme Court ruling that was around this roundup cancel lawsuits and that ruled in favor of Bayer really removes the weight of litigation on that stock and allows investors to really focus on other parts of the business where there's actually really good momentum. And so we're up about 5.5% for Bayer in Germany this morning.
All right, Chloe, thank you so much. Chloe Melly there in London. Also coming up this hour, we're going to count you down to the jobs report with Veronica Clark of Citi. So let's get right to the main event of the day. The payrolls report expected at 8:30 Eastern, with the whisper number now at 137,000 jobs added in the month of June. Joining us is Bloomberg's Skylar Montgomery-Koning. Skylar, what will people be focused on today? Will it be the top line number? Will it be wage growth, average hourly earnings?
Yeah, I mean, I think the key risk is that you actually get an unemployment rate that's lower, so it ticks down because you get such strong job gains. And I think that's a risk because it means that it's a more hawkish reaction, you get higher yields, and that can really wobble equity markets. More broadly, when I think about the number, this could be the fourth upside surprise in a row, and that's certainly what Bloomberg Economics is expecting. And it's really interesting because when we get these prints, they're quite exciting because the standard deviation of that print is quite large, but it's not unusual to get a number of upside surprises in a row. So in 2022 and 2023, you had 14 upside surprises in a row, and that's because it's very hard to forecast this number, but particularly when you're experiencing shocks. And for this number, we know that the World Cup is going on in the US, and that's likely to create volatility within your leisure and hospitality number, which could be skewed to the upside. And I'll just finish off by saying that there is also a lesson in the kind of momentum that we've seen in that data, in that 4 upside surprises in a row, 3 we've already had, means that even if you got a 0 print today, the pace of gains within non-farm payrolls would average 140,000. So I think it's a relatively high bar to say that the labor market isn't strong right now, and for that Fed hike that's priced this year to come out.
We also heard from Kevin Warsh yesterday in Central Portugal, sounding a little bit maybe less hawkish than the market had anticipated for that particular event, at least. Skylar, let's have a listen to what he had to say at one point.
Expectations of inflation over the first 4 months, first 4 weeks of this period, they've come down. Inflation risks have come down. Again, in our business, we don't want to overdetermine things. But if there were people in household or the business sector and the financial markets who thought that this central bank was going to be comfortable with an inflation objective above 2%, well, I guess they'd be disappointed.
Skylar is sounding a little bit less hawkish, perhaps, but nevertheless, the market is not repricing the yield curve today.
Yeah, I mean, I think that's really the point, is that, yes, commentary around the actual event was, it wasn't as hawkish as expected, and yields did come off a little bit when he was actually speaking, but on the day they were essentially flat and the dollar actually rallied. So I think the lesson is Warsh is doing exactly what he set out to do. He's not giving you policy guidance, and that means what you need to go off of is the actual policy guidance you got in June from the SEP and the dots, as well as how the data is coming in, and both of those are very much skewed in the hawkish direction. The other thing I'll say is the big development that he alluded to in that clip that you played was that commodity prices have come down significantly. Now, that does reduce inflationary pressures, but there's this asymmetry within the dollar where it's definitely more dovish for Europe and for the UK that didn't have an inflation problem before Iran happened to the same degree that the US did than it is for the US. So it's very much a dollar bull story still from here, despite the price action that we're seeing today.
Skylar, thank you so much. Wonderful context there from Bloomberg's Skylar Montgomery-Koning. And tune in for our interview with National Economic Council Director Kevin Hassett. That's coming at 9:30 a.m. Eastern. Turning to tech now, some of the biggest firms making their cases to Washington in the hopes of gaining the Trump administration's favor. OpenAI reportedly having preliminary discussions about giving the U.S. government a 5% stake in the company as part of a broader arrangement. This according to the Financial Times. Let's get more with Matt Bloxham of Bloomberg Intelligence. So we know that Sam Altman has been shopping this arrangement around since at least 2025. Bloomberg reported that in the past, Matt. But do we know if the other parts of the arrangement, which involve other firms, would come to fruition, as he's been speaking to other chief executives, and would they be happy with this arrangement?
Yeah, I mean, I think that part of the story is still very much unclear, and I think it would be fraught with lots of difficulties. And I think it's much easier for OpenAI and perhaps even Anthropic as private companies to perhaps negotiate acceptable arrangements with the US government about how that kind of equity transfer would take place. You know, we saw previously the government take just shy of 10% stake in Intel, but that was through the conversion of grants made available through the CHIPS Act. So possibly something like that could be a mechanism. But obviously, you know, there's some very, very big public companies out there that are heavily involved in AI, which might kind of fall into this, notably Google, Meta, and SpaceX. And, you know, it could be much harder to kind of engineer a way for the government to take, you know, even a kind of 5% stake in these companies. So I think there's still a lot to kind of be revealed about how this might work.
Matt, turning to Apple, we got word that it's trying to gain permissions to buy some memory chips out of Chinese companies, right? If that were to happen, if it gains those permissions, and Apple is typically in Donald Trump's favor, then do prices for Apple products come down and do we end up in a memory price war sooner than we're expecting?
Yeah, I think it's unlikely that prices are going to come down. Obviously, we've seen just the recent price increases on the back of these higher chip costs that are going into their products. I think from a commercial perspective, this move makes a lot of sense. Buying Chinese memory chips from Chinese companies for use in China-only Apple products. So it would be quite tightly ring-fenced, and I think Apple's hoping that ring-fencing will ease some of the concerns that perhaps hawks have in US political circles, but I think it's by no means kind of clear that they will get this. That both of these companies that they're in negotiations with are on blacklists with the Pentagon and the commercial department. So I think there's a lot of negotiation to be done. So there's a chance, but I think it definitely hangs in the balance. But it certainly would ease pressure overall on Apple having to push through further price increases somewhere down the line.
Just on that, Matt, would we actually see Micron and SanDisk and the like bring down prices, maybe, take a little bit less of a margin if this were to happen?
I think it's possible. I think that would only really happen if we started to see a kind of shift more to an equilibrium between supply and demand. And it seems right now that there's still very much an excess of demand over supply. So I think those chip companies are going to be pushing their pricing power for as long as they possibly can.
Matt, thank you so much. That is Matt Bloxham of Bloomberg Intelligence. A volatile session for the yen, the currency touching below 161 at one point. It was down almost 1%, pretty abruptly too. Traders staying on high alert for a possible new round of intervention. Bloomberg's David Savage joins us now. David, was this just the market deciding that there might be intervention pretty soon and it should act first, or could this have been actual intervention?
Yeah, good morning, Vonnie. I think it's probably premature to say it's intervention, just given the scale of the moves we've seen. But to your point, most of the Asia trading session, we've seen dollar-yen trading up, near its highs at 162.60, and so it's been a pretty abrupt move. And I think it's particularly abrupt given the very muted volatility we've seen in the currency pair in recent weeks. So. Certainly, I think in the context of coming into a U.S. holiday soon and the jobs data very shortly, I think it's definitely of note, because if we have a very strong jobs print, to Skylar's point, that would really, Skylar's point earlier, I think that really presses on the hawkish pricing we've seen in the Fed funds rate, which would then really put more upward pressure on dollar-yen. So perhaps that would make sense in terms of positioning ahead of that. But of course, the inverse is true as well. I think that it's really two-way risk. That if we saw a really weak print, you really could see some reversal, just given this pace of moves we've seen in the dollar more broadly.
David, what are we supposed to make of the Reuters report that Japan is changing its tactics and it's no longer going to telegraph such moves? I mean, the very fact that Reuters had a source that was telling Reuters that is telegraphing a move to an extent, no?
Yeah, no, I think so. I think, one other point in that report as well was the idea that they weren't going to telegraph sort of a line in the sand in terms of the exchange rate level. I think that's interesting because much of the weakness we've seen in the yen in recent weeks has actually been more of a dollar strength story. The yen has actually been one of the better performing G10 currencies in recent weeks. So I think that shows that as long as dollar yen is moving higher because of broad dollar strength, then there's probably less likelihood of intervention. But if you get very stretched positioning at some point, or acute yen weakness, then I think that's when you might get this sort of surprise intervention that was sort of telegraphed in this report.
All right, David Savage, thank you so much. Now to other top stories trending on the terminal this morning. SoftBank and its telecom unit will start renting AI computing resources to U.S. companies starting next fiscal year. The NeoCloud venture aims to supply data center capacity at a scale of 10 gigawatts by around 2030. According to sources, the new business could easily triple or quadruple the annual operating income of SoftBank's telecom unit. SAP is cutting back on hiring and travel to help fund its AI push. According to a staff email seen by Bloomberg, new hires will mainly fill AI roles. SAP has acquired several companies to bolster its AI capabilities. The SEC is examining trades tied to Susquehanna's claims that unknown insider traders made $100 million on options bets ahead of China's regulatory crackdown on cross-border brokerages. Susquehanna filed a suit claiming it lost more than $70 million as counterparty on most of the alleged insider trades. Susquehanna sued 100 John Doe defendants. Coming up, we're going to be taking a closer look at the one particular leveraged ETF tied to South Korea's SK Hynix and its impact on the broader market. More on that for your big take. This is Bloomberg. This is Bloomberg Brief. I'm Vonnie Quinn in New York. SK Hynix dropping by double digits in Seoul. The leveraged ETF fund tied to the South Korean chipmaker has grown so big and so fast that it's actually hitting markets, and not just in South Korea, but around the world. With our latest big take, Bloomberg's Charlotte Yang joins us now. So give us the ticker for this fund, Charlotte. I want to have a look and see exactly what's going on here. It's not the only leveraged ETF out there, but it seems to be an important one.
Yes, it's not the only leverage ETF out there, but it has certainly attracted so much attention from traders. So this product listed in Hong Kong in October, in just a couple of months' time, it has managed to grow its assets to $13 billion, and that's the largest of its kind anywhere in the world. And the big concern, because the product is built on one simple promise, which is to deliver twice the daily performance of SK Hynix shares. To do that, they have to go through a rebalancing process every afternoon heading into the market close session. And because of the size of the product and essentially these flows which they have to buy into the rallies and sell into declines, people are starting to get worried. So the product, and along with some smaller ones, they can account for 60% of turnover in SK Hynix shares on volatile days. And given SK Hynix now so central to Kospi, it's contribute nearly 30%, also the global AI trade, people are worried, what if we see a big down day? And these mechanical flows can exacerbate those declines.
Yeah, and I mean, the fund itself is up 1,100% since October, so I guess it's not hard to see why people would be enticed, right? Is there one on Samsung as well? And what happens when SK Hynix does its IPO in the US? Does that make the US ADRs any more susceptible to, being whipsawed as well?
Yeah, so I think immediately the next focus is SK Hynix ADR listing. Like you mentioned, it's seeking to raise $29 billion in the U.S. And this listing could potentially ease the impact of these leverage ETFs. Because one of the reasons why investors are buying into these products is because they couldn't easily access SK Hynix shares listed in Seoul. But with this ADR, it could be this could provide investors more ways to access the shares. And we're also hearing some investors, for example, the hedge fund investors in Hong Kong, they used to stick with equity swaps to buy into SK Hynix. They may be opting to use the ADR instead. So the ADRs can potentially boost liquidity and also ease this impact. And on your point, so far, the system is still working well. This feedback mechanism, the rebalancing flows, is helping to power SK Hynix higher on up days. But I think the broader concern is, what if this AI momentum shifts and these mechanical flows could really, the way they help the shares go up, they could also, drag the shares even more when they go down.
And Charlotte, is there a bearish SK Hynix fund as well, or will there be very soon? I mean, that's what you see in the US. You see these leveraged ETFs, and then they're opposite, so you can potentially short them when the tide turns, right?
I think on the product offering front, there are inverse products tied to SK Hynix as well, but they're just not as popular as these leverage ones, given I think overall people are still very bullish about over SK Hynix fundamentals, given the central role they play in HBM chips, for example. But on the other side, I think in terms of shorting or just going against the shares, it's actually not that many, which is why I think a lot of these banks that are offering equity swaps to help Intel manufacture the 2 times promise of these leverage ETF. That's why they're struggling so. It's really hard for them to hedge these exposures because simply there are not that many parties out there that's willing to take the other side, which is why based on our reporting, the hedging for these banks is also getting more expensive.
Charlotte, a fantastic big take, and thank you for explaining all that to us. That is Charlotte Yang. Much appreciated. Coming up, we're going to be taking a look at your front page news. This is Bloomberg. This is Bloomberg Brief. I'm Vonnie Quinn in New York. It's time now for your front page news. First up, the New York Times reporting on explosions in Kyiv that has killed at least 13. The Times says the large-scale assault began hours after Ukraine's President Zelensky warned Russia was preparing another massive strike on the capital. Next up, the FT reporting the White House accelerating plans for AI model standards. It says the US government is in advanced talks with AI companies to create voluntary standards, which could be announced as soon as next week. And finally, on the Wall Street Journal's front page, the US soccer team's 2-0 World Cup victory against Bosnia and Herzegovina. The team was forced to play with a man down after its striker got a red card. The Journal says the US will face Belgium in their next knockout round matchup. Coming up, we're going to drumbeat to the jobs report with Veronica Clark of Citi. It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Vonnie Quinn with your Bloomberg Brief. Let's get you set up for your day. Tech rout extending into the Asian session, the US dollar weakening before the June payrolls report. OpenAI and Apple making their cases to deepen ties with the US government. And the yen strengthens precipitously against the dollar as growing intervention risks keep traders on high alert. Let's take a look at how we are shaping up for the US session. So we're well off our lows. We had a massive down session in Korea in particular, huge gyrations once again with the Kospi down nearly 8%, but that's not really extending into a second day in the US. We'll obviously be looking to non-farm payrolls for any kind of direction, but yesterday's news that Meta was going to start renting compute had the stocks sell off about 6.25%, and that was behind the negativity in Asia and earlier in US futures. Let's take a look at yields after Kevin Warsh perhaps sounded a little less hawkish than the market was expecting. Not too much of a repricing, maybe a basis point or two at the long end. And then we do have the dollar weakening, particularly versus the euro and the yen. The yen has had a massive day so far. It strengthened at 1.1% and it prompted questions about intervention, although there were various headlines that also may have had to do with that strengthening. All right, let's get to some individual market movers now. Over to London and Chloe Melly. Chloe.
Good morning, Vonnie. We are seeing this AI trade in trouble yet again. So we had this huge sell-off in the Kospi in South Korea, extending over to Europe and now to those US stocks in pre-market trading, with Micron in particular down almost 2%, but Intel and Nvidia also struggling a little bit this morning because of those really elevated expectations, which means that any little hint of bad news does tend to trigger a sell-off. Moving on to Apple, which is in focus as well today, as it is in negotiations with the US government to buy chips from Chinese manufacturers that are currently on a blacklist. And so that is to ease the impact of this global memory shortage that's been really hurting the company and the sector in general. And so we are seeing a little bit of a gain this morning, about 0.8%. And finally, Bayer is also in the green this morning over in Germany after being upgraded to a buy rating by Deutsche Bank analysts, with the analysts saying that the Supreme Court ruling that was in favor of Bayer and related to those cancer lawsuits was really kind of removing that litigation overhang on that stock and allowing investors to focus on other parts of the business that are doing very well, like the crop and pharma division, for example. And so we're up about 5% this morning for Bayer.
All right, Chloe, thank you so much. Chloe Melly there in London. Well, we're 3 hours away from the non-farm payrolls report for June. Bloomberg's Michael McKee joins us at the desk now for a preview. The whisper number has been moving up, Michael, so the official consensus estimate is at 113,000, but the whisper number 137,000. We're expecting some strength.
Yeah, Wall Street sort of leaning towards strength, and they're extrapolating from what we've seen for the last 6 months or so, where we have seen stronger than expected payrolls come in. Now, does it really matter to the Fed, which is focused, as Kevin Warsh told us again yesterday, on inflation? If we get a decent number, and the 113 expected is a decent number, certainly. If we get anything higher than that, it's really not going to change the outlook for the Fed, because we're already pricing in Fed rate increases in the fall. We'll see if that holds after this. No change expected in the unemployment rate. I think inflation does come into play here, though, with average hourly earnings, because what we have seen is earnings falling behind inflation for the first time in a couple of years, since basically 2022. And that is not something that the administration wants to see, so it would be bad news for them if we continue to see that kind of movement. It would be great for workers if they start to see it go up a little bit.
Michael, how much weight should we give the numbers for June, July and August, given that we're going to start getting major revisions to data in September and so on, and also there's seasonal factors involved here?
Well, it is what it is kind of the answer to that question. All the time people ask about seasonal impacts, and we have that every year. So the Fed can only deal with what it's got in front of it, and it's going to be looking at changes in the composition of the labor force. Now, the labor force has basically been healthcare and leisure up to this point. And one of the questions is what kind of World Cup effect might we see in the leisure category? Leisure came in very weak in ADP this week. So did we hire a lot of people to man the concessions booths and be behind the bars for the World Cup or not? And beyond that, then we'll look see if there's any strength anywhere else. The employers have been on hold because of the Persian Gulf War, et cetera. And now, are they starting to hire? We don't know yet.
Can I ask you about Kevin Warsh yesterday? So apparently the market took it as less hawkish than perhaps they were expecting, or than he might have seemed after the FOMC. Ed Giordani today talking about how Warsh is going to be guided by the bond vigilantes, and this was obviously clear again yesterday. Did you think he was a little less hawkish?
I didn't think so. I think he was very cautious in what he was saying, and basically hewing to the line that he had put out there that we're not going to talk about what we're going to do. And so Wall Street is supposed to take a look at the data and make their decisions. Wall Street's taking a look at the data, and we still see a rate increase priced in for October.
Yeah, exactly. All right, Michael, thank you so much. That is Bloomberg's Michael McKee. He'll be with us all morning long. Joining us now is Veronica Clark, U.S. economist at Citi. Veronica, speaking of rate increase in October, you don't expect a rate increase in October. In fact, you expect a rate decrease in October.
Yes.
What would have to come out in the data in order to allow that happen?
Yeah, we are very out of consensus in thinking that the Fed is still cutting. And yeah, obviously a lot in the data has to change. That's definitely not the risk that we see in the data we have at hand. But I do think that could start to change with this morning even. I think the market has gotten a little bit complacent in just expecting stronger jobs data. But to me, it looks like the payroll data have gotten very volatile. We are expecting 25,000 this morning. That is lower, and that's really just based on we've seen data like initial jobless claims and continuing claims rising over this June reference period. Even with stronger payrolls, hiring has been very low. And then it's really the data over the summer. You would want to see the unemployment rate rise to think that the Fed would be cutting. But that has been the trend the last couple of summers, and I think we'll see that.
The market is very definitely pricing in an increase. What would we have to see in order for the market to just reprice for a hold?
Yeah, right now, there's even some chance of a hike as soon as the July meeting in a couple weeks. I think we'll slowly price that out, starting with payrolls today, right? If we get a softer payroll report, whether that's the unemployment rate rising, softer payroll job growth, maybe some revisions down to May, I could see that also. And then we'll get CPI in a couple weeks. I think that will look relatively benign, and so you'll gradually price out those hikes. You'll price out July. And then it's really data for, July, August, September for both labor market and inflation, where I think both will look softer, and then that's really when we price out those hikes.
But a couple of ticks in the unemployment rate, or, and I don't mean to dismiss a couple of ticks in the unemployment rate, that would be serious for the workforce, right? But for the Federal Reserve, would that be enough to justify an actual decrease?
I think so, because you have to look at what's happened the last couple years, right? Like, this has been a very abnormal cycle in a way. We've had this very low hiring, low firing environment for a while, which when you see that, you get low hiring for maybe 6 to 9 months, the unemployment rate is gradually rising, and then at some point it rises much faster and you get larger layoffs, and that just never happened. But the unemployment rate has also not come back down. We've just continued to gradually increase. So yeah, it's a couple tenths a year, but how long can the unemployment rate rise by a couple tenths a year before it looks more concerning at some point?
Let's take a listen to some of the comments from the Fed chair from Sintra yesterday.
Expectations of inflation over the first 4 months, first 4 weeks of this period, they've come down. Inflation risks have come down. Again, in our business, we don't want to overdetermine things. But if there were people in household or the business sector and the financial markets who thought that this central bank was going to be comfortable with an inflation objective above 2%, well, I guess they'd be disappointed.
So your reaction here, I mean, he's basically saying enough that the market repriced to do some of the Fed's job for it, right?
Yeah, we did get that, right? We're pricing those hikes. We're taking it seriously that the Fed cares about inflation. But I do agree also that the inflation risks have come down a lot in the last few weeks. We'll start to see that as soon as headline inflation with June. Gas prices are lower. And then later in the summer, yeah, I think you could see things like airfares starting to come off. Those moved up with higher jet fuel costs and whatnot. And yeah, I do think we'll see some better inflation data in the summer.
Even if it does, though, or even if we look at other gauges of inflation, you're still talking about something like 2.4%, 2.5%. I mean, that's not 2%.
It's not.
Would Kevin Warsh be happy with a different baseline?
Yeah, there is a debate, I think, that has to happen among Fed officials where, there are some conflicting signals across all of the data. I do think by the end of the summer, yeah, we could see core CPI at something like 2.4%, which in normal times actually would be pretty consistent with core PCE at around 2. Usually core PCE runs a bit softer. Core PCE has been much stronger because of some of these components, that move with equity prices or memory costs. But we're actually going to get some big revisions in September to core PCE, and I think that's going to mean core PCE looks lower. But yeah, you have to look across a range of indicators. What's the right way to look at underlying inflation? We'll have a task force, I think, that is dealing with this now. But I think across the range of indicators, you're feeling a bit better that you're closer to 2% than you have been.
So Warsh also talked again about productivity and AI being a perhaps disinflationary force. Maybe not immediately, but he seems to think pretty soon. Paul Donovan this morning talking about a belief in the productivity pixie. He says it's just mistaken to believe that we'll get disinflation anytime soon.
Yeah, right now the AI build out is certainly inflationary, right? We're seeing it in the memory costs, computer prices, things like that. And that is boosting some of the consumer inflation measures, core PCE, for instance. So it is an inflationary development right now. Certainly, supporting equity valuations and wealth effect. Maybe people are spending more because of that. We'll have to see how the productivity development plays out. We don't see it in the data yet, but it's certainly a possibility years down the line.
All right, and your base case at Citi right now, cuts in October, December and January.
Yep.
All right, Veronica, thank you so much and good luck. Later on, that is Veronica Clark of Citi. And don't miss our interview with Kevin Hassett, Director of the White House National Economic Council at 9:30 Eastern on Surveillance. Now, to other top stories trending on the terminal this morning. The yen strengthened pretty precipitously against the dollar. Speculation growing that Japan could intervene again to support the currency. The movement comes ahead of U.S. jobs data and thin trading before the July 4th holiday. SoftBank and its telecom unit will start renting AI computing resources to U.S. companies starting next fiscal year. The neo-cloud venture aims to supply data center capacity at a scale of 10 gigawatts by around 2030. According to sources, the new business could easily triple or quadruple the annual operating income of SoftBank's telecom unit. Power prices are surging from New York to Virginia as an intense heat wave pushes electricity demand towards records. New York City power prices topped $1,100 per megawatt hour yesterday and are expected to climb even further as temperatures cross 100 degrees Fahrenheit, or about 38 degrees Celsius. Airlines and rail operators are warning of heat-related disruptions, threatening Independence Day plans. Coming up, Washington and AI. The Trump administration reportedly expediting plans for AI standards. This as firms look to deepen ties with the White House. That's next. This is Bloomberg.
Those boats are coming out of the Hormuz Strait. They're coming out by numbers that nobody ever saw. We're setting records, actually. The oil is dropping. We have some great oilmen here. I don't know if they're happy or sad. I don't give a damn if they're happy or sad. I want the prices to go down, and the oil is dropping like nobody thought possible.
President Trump touting falling oil prices at the Freedom 250 event celebrating U.S. independence. Bloomberg government's Mika Solner joins us from Washington. What's the president focusing on in his messaging? What could we expect this weekend, Mika?
Yeah, I think that we're going to hear a lot more about these oil prices dropping and American gas prices going down. I mean, the administration is very laser focused right now on making sure Americans can hear that message, given that affordability, cost of living concerns have been so high and such a black eye for the admin, especially in light of the Iran war and things winding down now. So we're going to see a strong message from President Trump. We're also going to hear him draw a strong contrast between his priorities and the Democratic Party. I expect that this weekend as well.
And just the TikTok around Washington, D.C., will we be seeing celebrations basically the entire weekend long?
Basically the entire weekend long. I mean, I guess the country only turns 250 once, but I know that this is a huge deal for the White House. And they've been really, pushing a lot of events and promoting what they have, the great national fair on the mall as well. So, yeah, it should be interesting, and we'll see how everything goes.
Yeah, exactly. Mika, can I ask you about the White House potentially accelerating plans for AI model standards? This is reporting from the FT to suggest that actually we're a lot closer than we might think, that the government has been talking with AI companies and putting in place some kind of a regulatory framework.
Yeah, I think that we could see that potentially announced very soon from the White House. And this is a huge interest for the president. President Trump signed an executive order last month related to AI. And they're in a tricky spot when it comes to just kind of their interest in exploration. I know that some of some of Trump's conservative influencers online or usual supporters of the president have pushed back, asking for deeper regulation on AI. So it's a politically tricky subject, but we're definitely seeing more policy moves from the White House on this area.
All right, Bloomberg government's Mika Solner in Washington, D.C., thank you so much. And we'll stay on that theme now because some of the biggest firms are making their cases to Washington in the hopes of currying favor, really, with the Trump administration. We also have OpenAI proposing handling this by giving the Trump administration a 5% stake. It's part of a broader plan, though. Let's get to the details with Matt Bloxham. So this is Sam Altman. Matt, talking about basically offering other people's companies a stake in them to the government. Will they agree, these CEOs of Anthropic and other companies that Sam Altman thinks will be happy to give up a stake?
Yeah, I mean, I think this is going to be quite complicated. I think much easier for private companies like OpenAI and Anthropic to negotiate an arrangement with the US government. Obviously, a lot harder for some of these public companies like Google, Meta and even SpaceX to kind of figure out a way that's going to be okay with their existing shareholders, because potentially dilutive to existing shareholders. There's a lot of different ways that such a mechanism could work. We saw in the case of where the government took a 10% stake in Intel, that was through the conversion of CHIP Act grants being converted into equity. So that could be one possibility for OpenAI and other companies, but certainly it's going to be a very sensitive issue for existing shareholders in all of these companies. And obviously, we are talking potentially quite substantial sums of money. So there's a question mark about where the US government gets this money from and whether it represents kind of a good long-term investment for the US.
Well, that's just it, because that's one of the arguments, right, that it would be a good investment for the people of the United States. But you have to ask yourself, is the timing right, or is it a little bit too late for that potentially? Now, Apple is also lobbying the US because they're trying to now buy Chinese memory chips. Obviously, upping the prices, the reaction to the stock and so on, it's hurting at Apple. What can China sell Apple memory chips for that Micron or SanDisk or some of the others can't?
Yeah, I don't think it's so much a question of can't. I think this would be basically swapping out existing suppliers for new local Chinese ones. And you remember that China accounts for about 20% of Apple's global sales. So it's quite a significant amount of volume. And obviously, there is upward pressure on pricing, and that pressure is coming from the supply constraints on chips, and chips have been going up hugely. So I think that anything that Apple can do to kind of diversify its supply, get better value money, and this is about talking about supplying Chinese chips for Chinese products, that would certainly ease Apple's supply and input costs, and potentially also ease the issues and challenges they're facing on their global product supply and the pricing on products even in the US. So this could be a win-win for every market, but obviously there are significant hawks in the US that would be very resistant to this arrangement, because these proposed suppliers are on blacklist with both the Pentagon and the Commercial Department. So I think there's a lot of hard negotiation to come for Apple to kind of get this through.
Yeah, that would be quite the turnaround. Just more broadly, Matt, how far are we from, a memory price war? At some point, some of the companies will have to start bringing down their prices, right?
I think that's certainly a possibility, yeah. And I think, certainly if you look at some of the multiples implied by some of these companies, there's an expectation that this is a kind of, relatively short-term demand bump, and that we could ultimately face another supply glut in the chip industry. We've seen that many times before. So I think really to kind of avoid that, these companies need to be quite careful about the pace at which they invest in incremental capacity, and that we do see a continued surge of demand from enterprise customers for AI, which is ultimately what's driving this kind of big demand bump for AI chips. And I think obviously there are question marks around that right now in terms of the growing cost of token use, and whether enterprises are going to double down and invest more in AI, and whether there's a return on investment there for them.
Yeah, and it's so tricky, right, Matt? Because if you announce that you're bringing on capacity in 2 years and then you sort of retract some of those plans, then that doesn't go down well with the market either. Matt, thank you so much. Matt Bloxham of Bloomberg Intelligence. Coming up, your jobs report is going to be front and centre. We'll have your trading day details ahead. This is Bloomberg. Bloomberg Brief. I'm Bonnie Quinn in New York. Now look at what's ahead today. Of course, the main event, June payrolls out at 8:30 a.m. New York time. We do also get weekly jobless claims, though, and also, because it's Thursday, of course, we get factory and durable goods orders for May. That's at 10 a.m. Eastern. Cash treasuries closing early, 2 p.m. ahead of the Independence Day holiday as well. So don't forget, your day is shortened and you don't have to trade tomorrow unless you want to. Here is your macro picture going into your Thursday session. We're lower on futures, but we are obviously treading water ahead of that jobs data. Nasdaq 100 futures picking up a little bit of the negativity from the Asian session, also from the US session yesterday, where we obviously saw the stocks down 6.25% at the end of the session. Yields really remain unchanged after Kevin Warsh at Sintra. Let's take a look at the dollar, though. That's been a big story today. So it's weakening ahead of the jobs report, but also dollar yen strengthening precipitously at one point, 161.21. There were talks of potentially intervention, but most participants say that it hasn't been intervention, but be on the lookout for it. And crude continues to come down. That's it for Bloomberg Brief.